Hey guys, I talked this weekend about gold and I priced it in different currencies. I priced it in stock market currencies and bond market currencies and currency market currencies, the commodity complex. But I didn't, I didn't give a conclusion. So on the screen here, you see four price charts on the screen. The top price chart is gold. And what I want to do is just quickly tell you what I'm seeing going on with gold and why it's important. And there's kind of a first principles in this. So the very top price chart is just gold. That's gold. It's the index of gold, meaning it's the futures contract. So that happens to be priced in dollars. Right below that, this one right here, maybe I'll do my two blue lines if you can see that. So that is gold priced in S&P 500 units with dividends reinvested, and it bottomed right here, right? So gold has been going up in price relative to the S&P 500 with dividends reinvested since October of 2018, right around here. And we're going to be coming back to this here. Gold itself kind of bounced along this $1,200 price point, as you can see in the top price chart. So gold is increasing in price against the US stock market, which of all the stock markets on the planet, it is the strongest one. The only major index that is beating the S&P 500 is the NASDAQ 100. And right down here between the two blue lines is gold priced in the whole commodity complex. Again, very similar story going on. Gold is appreciating. Now you can tell gold is appreciating much better relative to commodities than it is to the S&P. But here is the next major asset on the planet, not the next major, but one of the major assets on the planet, which is the commodity complex. And you can see it bottomed right here, right around the same time it bottomed against the stock market. And there's a coiling going on, right? So gold is kind of coiling in price relative to the commodity complex. Same thing with the stock market. Now, the thing about the top, if you want to just think of the top as gold priced in the largest fiat currency unit on the planet, which is the US dollar, it's the most powerful fiat currency. It's the most powerful currency. And same thing, it bottomed multiple times right in the same time range. And it's doing the same thing. It's just consolidating. It's not crashing. It's not going higher. It's not going lower. Just kind of slowly consolidating. And then down here at the bottom is gold priced in the bond market, US bond market. Now, in the video, I showed you both the US bond market and the international bond market. But again, a very similar story to the other four asset classes. Here, gold bottomed in August of 2018. So you have gold bottoming to every major commodity, commodity between August and October of 2018. Let's just call that 2 years ago. And a very similar thing, gold is consolidating relative to bonds. So there's a couple takeaways here. One, when I train my clients, I train them to own things that are strong, both in absolute sense, but also relative to other major assets, right? Because if you're buying something, you only want to buy it if it is strong in its own currency, in this case, the US dollar, but also stronger than every other major. I'm going to even call those other things. Well, I was going to say currency, but that's may confuse people. But all the different major asset classes on the planet. And you often hear me say there's four of them or there's five of them. And the reason I switch off because sometimes I say fixed income as one asset class, which includes currencies and bonds, or I separate those two out. So you have gold strengthening against every major asset class on the planet: stocks, bonds, currencies, commodities. What I don't show you here is real estate. The real estate price charts, they update every 3 months in lag. They lag. So it's a very kind of confusing, odd price chart to look at. But gold is also appreciating against real estate. And I bring this up because you want to own things that are in long-term secular bull markets if you can. And if you've identified an investment, in this case, gold's really a sub asset. You identify an investment that is appreciating in all the major assets, then you have something that is pretty strong. Now, guys, I don't know if gold's going to break down or it's going to, crank higher in the next couple weeks and go even higher into the end of the year. The point is that the probability of you owning things that makes you safer and more stable greatly increases when you can find an investment that is appreciating against all other major asset classes. And I forgot to kind of put a bow on the video this week, and so this is the bow on that conversation. And again, the biggest takeaway is you only want to own things that are beating everything else, because that's when you have powerful simplicity, ruthless simplicity of your investing in your life. And that's where you can truly get control back over your money, get control back over your finances, get control back over your investing, have you and your spouse on the same page, be able to eliminate that angst and that worry and that overwhelm, because getting trained to turn on your pattern recognition brain is so incredibly powerful. So I hope that helps. Thank you, everyone, for emailing me. And if the comments were turned on, and I did now turn them on, um, I'm sure I would have gotten comments that said that, see, you forgot to put the conclusion on. So thank you for emailing that in, guys. Comments are now back on with that video, and they are on with this video. So, all right, guys, I will speak to you guys soon. All right, thanks.